We're here with Nick and Craig and Jeremy. Welcome.
Hello, Kareem. Nice to see you again.
Thank you.
Nice to see you all.
Nice to be here.
Yeah, absolutely. Go ahead, Kareem.
So Nick and Craig and I and Jeremy have spoken before. They've got such a depth of knowledge and they're doing innovative things. And when we spoke with them a year ago with Inverted Ventures, a family office that was innovating and using funds to find disruptive technologies to invest in and change the landscape and the direction that family offices normally take. And so it's been a pleasure getting to know both Nick and Craig. And now we've got a new player here, Jeremy Hill, and him and I spoke a little bit this week. And your background, Nick, Jeremy, is with the financial industry as a whole, with specific talents, but more importantly, building and innovating on building funds that are going to address this wonderful topic of addressing climate change. I know I'm not Shelley or Irene or Nicole that did do justice to your introduction and your resume and your bio. So I will let you take it from here, Nick, Craig, and then Jeremy, to give us a little bit of a background from your own words, things that you're not shy about saying. For Craig, don't be embarrassed by things that you keep hidden, expose those. And then Jeremy, a little bit more about why you're doing what you're doing and what's in it for the globe and for your investors in terms of addressing this big problem of climate change and technologies in that space. What we want to try and do at this panel is get a broad landscape of what are the issues that we're tackling and how best we can do that. We've had conversations, did a couple of people, met a few people over Decentral in Miami. We were talking about carbon credits. You know, there are various opportunities there, capture, what's the word? Securitizing, offset, assets, banking, et cetera, et cetera. Yeah. And then actually following this panel is with James and Scott from Val Hill Capital, which will be very, very interesting. So if you guys can stay after that, will be great. And that's about blockchain, investing in natural resources and the truth about that. So the panels that are following each other are quite relevant. And I see that Jimmy Valley is already here, so he'll be paying attention to this. Nick, why don't you start, Craig, and then Jeremy, take us down this path of building this environment and structure and what you're hoping to accomplish.
Fabulous. Well, really quickly, I'll just do a quick introduction of Inverted Ventures, which is Craig's and my company. We are a single family office that invests in paradigm shifts. We're not looking for investments that are going to further the status quo just a little better. We're looking for technologies and disruptive investments that can potentially turn the industry on its head. We got our start really investing in cryptocurrency, and eventually after trading cryptocurrency from 2020 through till 2021, we sold the vast majority of our cryptocurrency position in order to start an early stage venture capital book. Now that we've moved more into the early stage venture capital investing, we've been looking for other potentially paradigm shift type investments. And that's a good segue into why we're investing in climate technology, but we'll get to that very soon. So really excited to share the panel with you guys. And just so everyone can know, my name is Nick Rodrigues and I am the CEO of Inverted Ventures. Pass it off to you, Craig.
Thanks, Nick. Hi, everybody. My name is Craig DeCruz. I'm the Chief Operating Officer of Inverted Ventures. My background is I was a chef for 24 years. I ran, teams between 22 and 70 people for large corporations like Marriott International, Delta Hotels, and the University of Calgary. In that time, traded stocks, bonds, was in the equities markets, learning TA, things like that. And then I joined Inverted Ventures, and I'm heading up the research and development portion of our venture capital book. I helped Nick with the research and development of our cryptocurrency book, and now we're looking at equities and carbon and everything, and we're really developing ourselves into this space and trying to become front runners in the area. That's it for me. Off to you, Jeremy.
Thanks, Nick and Craig. Really appreciate it. Great to be here, Karim. Thanks so much for hosting us. So I am one of the managing partners of Kidbrooke Environment Fund, which is it is a fund that invests in carbon credits. And we'll get into the fund. I know that Nick, Craig, and I are going to talk a lot about kind of investment aspects as well as generally kind of carbon credits. But a little bit about my background. A long time ago, because I'm an old guy, I started as a baby investment banker in the aughts, a lot of internet kind of deals. Then I went to law school and I worked for a variety of the investment banking platforms. And eventually in 2013, I set myself free and became kind of a financial entrepreneur. Developed and eventually sold a credit boutique, credit derivatives fund. And then after that, ran a family office for a while. And then after that, ran a long short equity fund. And it kind of, so I have a kind of broad background in both kind of finance, operations, investing, and now full attention, absolute certainty into carbon credits with Kidbrooke Environment Fund. And I should disclose right away, I know you're going to tell everyone as well, Nick and Craig, but we are absolutely thrilled to have Nick and Craig and Inverted Ventures as our seed funder for our general partnership of the fund. So that's kind of our relationship on a commercial side. But more than that, Nick and Craig are super resources, highly knowledgeable in the field. I'm always astounded how much you guys know. I always think I know a lot about carbon credits, but you guys are really also pushing the ball. So I look forward to this conversation.
Well, thanks. Thank you, Jeremy. Really appreciate that. I guess I can start this off. Actually, Nick, if you want to do the disclosure just before.
Sure, I'm happy to.
So
just want to disclose quickly, we just need to make a quick disclosure and legal disclaimer about the Kidbrooke Environment Fund. So Kidbrooke is a private investment fund. As with any investment, there can be no assurance of investment objectives, and past performance is not a guarantee of future results. We can't make sale of the fund absent a private placement memorandum. We may make forward-looking statements, and those forward-looking statements may be based upon assumptions which may or may not come true. So just want to make sure to stick that in before we start our discussion. But I know Craig is going to be asking Jeremy and I quite a few questions, and we're going to dive right into both the carbon market and what Kidbrooke is going to be doing within the carbon market.
Perfect. Well, thank you. So first question, I'm guessing a lot of people are going to be asking this right now. What are carbon markets? Can you guys explain to the group what are carbon markets and how do they work?
Yeah, I think I can give a little kind of history, kind of brief history lesson here. There's quite a lot of history with carbon markets, but it's kind of the summary form is some of you might remember that in 1997 there was United Nations Kyoto Protocol, and that was kind of the first international agreement where nations decided that cutting CO2 emissions would be in their long-term interest. And so based on that, there was something called the CDM, which is the Clean Development Mechanism. And it basically allowed industrialized countries to reduce emissions by offsetting in areas that perhaps were less industrialized, so developing world. And kind of from that, we've gone into the Paris Accords, and then kind of a couple of weeks ago we had COP26 in Egypt, and so on and on and on and on. But that's kind of the historical genesis of the carbon markets. And if you just take that a little bit further, we're kind of like in, I don't know, version 2.5 of carbon markets right now. So the first iteration was just very much a bilateral set of circumstances. We had some traders, kind of pursuant to the Kyoto Protocol. And then after that, the European markets did very much heat up. There was a series of financial products that were popular for a while. Volume kind of faded quite a bit during the global recession. And now we're kind of in a reset mode. The markets have resubstantiated themselves, and now they're starting to develop in ways that I would describe as having some level of maturity, some level of history, yet not being at all institutionalized, i.e. lots of opportunities. And so if we just remember, like, why carbon credits, why the carbon market, and I think we're going to get in, Nick, as to kind of, what is the carbon credit next. But look, I am certainly not here to debate whether or not global warming is real, whether or not climate change is in fact going to happen. It is, of course, our thesis that it is. However, I would just, it's pretty obvious that kind of every year we're emitting more and more greenhouse gases. I think last year, kind of like 51 billion tons of greenhouse gases were pushed into the atmosphere. My guess is that in order to get to a level of neutrality or even stasis, carbon credits and all environmental remediation types of technologies are going to be of high value.
No, I completely agree with your analysis of the market, Jeremy. Thank you. Really quickly, just to start off the conversation about carbon markets, I think it's really important to define two terms. One of those is carbon offsets, and the other is a carbon credit. So let's start with carbon offsets. If you take 1 ton of carbon out of the atmosphere, you are then creating a carbon offset. It is offsetting 1 ton of carbon that is being taken out of the atmosphere. So now questions can emerge. What ways can you use to actually take a ton of carbon out of the atmosphere and actually be awarded a carbon offset? Well, there's several different categories that can break into. I mean, you could have situations of reforestation or soil carbon sequestration. You could have blue carbon, which is essentially habitat restoration of areas related to the ocean. And again, you could also have direct air capture, technological removal. There's a number of ways that you can reach this period of taking a ton of carbon out of the atmosphere. So that being said about a carbon offset, a carbon credit more works like a permission slip for emissions. So essentially they are the tradable asset that is the actual carbon ton that is being taken out of the atmosphere. This kind of leads into the biggest conversation of a distinction between the two major types of carbon markets: voluntary and compliance. And Jeremy, I think this is a perfect one to pass back to you for.
So let me just kind of tie that with a little bit of a bow there, Nick. So really, there are two types of carbon credits. And so carbon credit is kind of a generic term, as Nick is saying, right? A carbon credit can be either a compliance carbon allowance, or it can be a voluntary type of offset, right? And so those are the compliance market is a market that is quite large, quite sophisticated. And the way to think about that is it's basically a whole bunch of regulatory regimes in the developing world, kind of principally power plants. So for example, if you are a regulated power plant in California, right, the government will issue you a certain amount of compliance carbon allowances. It's a linear decline rate every year, but then you can basically emit that amount of greenhouse gases and carbon, okay? Now, if you emit less than that amount, you can sell those carbon allowances into the free market. If you emit more than you were planning or that you were given permission to, you can then buy from the market, okay? That's the compliance carbon market. We are not talking about the compliance market today. So the compliance market is, again, a highly regulated, kind of sophisticated, much larger market. It is based upon 7 major cap and trade system, mostly the EU ETS, UK, California. There's one called RGGI. There's one in New Zealand. There's one in EU for aviation. There's one in California for aviation. On and on and on. These markets are, again, they are tradable, but that's not what Kidbrooke does. So we are completely focused on the voluntary market, and the voluntary market, as Nick was alluding to, is, broadly speaking, these are carbon credits that are a way to offset carbon emissions. So basically, a carbon credit is a compensating equivalent, if you will. Each credit, right, corresponds to 1 metric ton of reduced, avoided, recovered, whatever you want, CO2, or it could be, in some cases, not CO2, but other greenhouse gases. But anyway, we're talking about CO2 carbon credits here, right? So if you think about a kind of case study, just so you understand what we're talking about here, if anybody has recently flown, even domestically, maybe on Delta or United, right? You purchase your ticket, and before you purchase your ticket, you get a pop-up screen that says, would you like to purchase a carbon credit or a carbon offset, right? That is what we're talking about here. The carbon offsets, the tonnage that underlie those voluntary carbon offsets, that's what Kidbrooke Environment Fund invests in.
And, one thing I can add too is that, the voluntary market is growing very rapidly. In 2020, the market was about $500 million. In 2021, it went to $2 billion. So 4X. We don't know the final number for 2022, but we know that there's multiple X's on that. So we're looking at a market that is growing very fast, very quickly. Another thing that I know a lot of people know about is Tesla has lots of credits. Well, they sell those credits mostly to Ford because Ford does exceed their emissions. So there is a little bit of balance. And like Jeremy said, that's the cap and trade aspect that we're not looking to get into. I guess one question I have for you guys, this would probably be really good for Jeremy, is why are carbon markets necessary?
Yeah, I mean, it's tricky as to why they're necessary, but it's also just kind of routine. It's kind of, it's just a building block of thinking about the environment. So the basic premise, right, is that there are whole swaths of the economy that for loads of different reasons, right, they can't simply switch to carbon neutral operations. They can't abate their carbon. Okay, so if those parts of the economy, right, I'm talking about the global economy here, if they're either forced to through regulation or they desire to do so to offset their carbon footprint or to neutralize their carbon footprint, reduce it, right, there's really only one way to do that. It's via voluntary carbon credits. You spend carbon here, you offset here. Yes, right, Craig, we will eventually get to, for example, low carbon fuels for airplane, low carbon steel plants, but they're not efficient and cost effective. That chemistry is not efficient and cost effective right now. So that's still in the future. And in the intermediate time frames, the next 10, 15, 20 years, in order for those companies to neutralize their balance sheet, again, via regulation and or desire, right, they are going to have to buy carbon credits, voluntary carbon credits in the market. There's also kind of, sometimes if you start talking to someone who's really sophisticated in carbon credits, there's really a second derivative reason why voluntary carbon credits are essential. And that's kind of either, I mean, you can describe this either in kind of de facto or de jure sense of forcing cheaper technologies through the pipeline. So basically, what I mean by that is, if it's an economics kind of argument, right? If you're burning a ton of coal and you have to offset that, right? Notionally, in relative terms, that's the same cost as perhaps employing newer, cleaner technologies. So the thinking is that over time, right, if these two things are the same, coal plus, or coal's an extreme example, but normal operations plus carbon offset versus carbon, less carbon intensive technology, where technology is on a kind of a declining cost curve, right? That's obviously good for mankind because then you can kind of swap. We are not there yet. I mean, like, that's, for most industries, that's 20 years out, right? We're not even close to that, right? We are not close to kind of low carbon fuels for airplanes. I know we're going to get a question later on. It's like, oh, but what about this? I've seen this, right? Okay, there are industries certainly that have low carbon technologies that are becoming accepted for sure. However, by and large, I'm talking global economy, not just the United States, not just developed economies, right? The carbon offsets are absolutely essential if we want to limit global warming to 1.5 degrees Celsius. That's the Paris, that's like the, that's the worst kind of outcome for the Paris Accords, right? We'd love to limit it to 2.0 Celsius by 2050, no later than 2050, but that would require almost a whole economy transition. So carbon credits, voluntary carbon credits, are an essential part of that march towards limiting global warming for those economies and those industries that cannot abate their carbon spend.
Jeremy, if I might add in just a quick note of how I like to rationalize why carbon credits are important in my head. The biggest item that I continuously revert to is they're actually a rewards mechanism for the type of transition in our economy that we want to see. It's a means to an end for us to transition our economy into that future that you described, where we are more environmentally sustainable, where we do have technologies that are able to actually produce the economic result we want, having the level of negative impact to the environment we want. But actually transitioning our economies towards that is an extremely time-consuming, capital-consuming process. So carbon credits really are just the transitional mechanism that incentivizes businesses to come to this greater system.
Yeah, that's well said as well.
I agree with that 100%. I guess, this is the Global Investors Conference. So let's talk about investment. What opportunities exist in carbon markets? I think people here are going to ask, there must be opportunities. So what are those opportunities, and why are you gents interested in this space?
Okay, I'll take that quickly. So let me just tell you what the strategy, the investment strategy of Kidbrooke Environment Fund is. It is to purchase high quality voluntary carbon credits. It is also to add project capital to developers' capitals, to the capital stack of projects that are developing high quality carbon credits. We're going to do that in a risk managed way, right? We believe that in the intermediate time frame, these carbon credits will benefit from a whole host of factors that I'm sure we'll go into, kind of investment thesis in a minute, but that's just a description of the fund and the strategy as it is right now. So from there, I'm happy to take in any direction you want, Craig. Let me know. Do you want to kind of go into like who are the ultimate buyers of carbon credits, or what do you want to do here?
Pardon me, Craig, you're muted.
Yeah.
I'm so sorry, guys. I think, let's talk about who would be the ultimate buyer of these credits, and then how are you able to monetize it, and what is the fund's thesis?
Right. So we've kind of set the table here, right? We've talked about kind of the market, what a carbon credit is, why a carbon credit. Now let's talk about who buys it, and then from there, let's transition into kind of why Kidbrooke, kind of the dynamics of the fund, right? So who buys carbon credit? Well, the real answer is it's unknown. Okay, who buys voluntary carbon credits? It's unknown because there's no real reporting requirement, at least as of yet, right? We only know when corporations voluntarily disclose that they've purchased voluntary carbon credits. But if you are a large corporate buyer of carbon credits, you're probably incentivized to be a good guy, to say, hey, look at this great thing I've done for the environment. So, the thinking is, by and large, let's guess 2/3, 75% of the voluntary carbon market purchasers have announced at least a portion of their purchases, right? So, the was actually a crypto company called Toucan Protocol, right? Some of you on this panel and some listeners will probably recognize that. But you've got large corporations, so Alphabet, Cemex, Disney, Delta, General Motors, Shell, Volkswagen, Audi, E&I, on and on, right? These companies are buying. I mean, Delta Airlines bought basically 8.6 million tons of CO2 carbon credits last year. Volkswagen bought 3 million tons. Audi bought 2.5. So there are a whole host of corporate, large cap, Fortune, let's call it 2,000 types of buyers. And then underneath that, there's a whole swath of corporate entity buyers and government buyers that are less publicized, right? Those are your typical SMEs, 100 million revenue. Maybe they're, I don't know, they're manufacturing leather somewhere, and they offset some of their carbon spend. That's not really going to be reported into our kind of databases. That being said, the big thing, the big takeaway here is that the intention, right, of corporations seems very much to buy more carbon offsets, right? So I'll give you an example, right? Major Italian oil company Eni, right? They announced in November that they were going to aim to increase their carbon credit portfolio by 2025 to, I believe it was 10 million tons, and then 30 million annually by 2050. So that's like a 80% reduction in their total carbon emissions. That's a petroleum company, right? So those are the types of voluntary emission purchases that Kidbrooke Environment Fund clearly wants to get ahead of.
If I may jump in quickly, first of all, Jeremy, I think that's an exceptional explanation of who the ultimate buyers are, as well as exploring some of the opportunities that exist in carbon markets. I really want to hammer on one point that I think is so important about why now is a great time to enter carbon credits and carbon markets. There is a global concerted effort from multiple governments, from almost every government worldwide, that is mandating a move towards a carbon credit system or some form of system that is going to rapidly advance this market. This is speaking from Inverted Ventures perspective. One of the biggest reasons we were excited about cryptocurrency last year, in 2020, was because of how nascent the market was. I mean, at that point, Bitcoin had a market cap that was more comparable to a company like Home Depot's market cap, and it grew into, at its peak, a multi-trillion-dollar asset. We're talking about the voluntary carbon credits markets that have just recently 4x to being a $2 billion valuation. Imagine over the years how that can absolutely skyrocket, especially given that this is a market that governments are actually trying to get people to transition into. The opportunities for investors are absolutely colossal. And I think that really speaks to why this is just such an exciting opportunity. I know.
Yeah. Can I follow up on that
Please,
for a second, Nick?
Please do.
So one of our investment thesis, or one prong of our investment thesis is more regulation, right? More regulation, and that's I think what you're speaking to. I mean, look, government actions are already in play. It doesn't take somebody very much time to just go online and read kind of what's already out there. It's a little bit confusing, right? Because there is not yet a central governing body of voluntary carbon credits. There is not yet a central repository. There is not yet a central standards committee. And so when people look at the market, it's fragmented, right? There are kind of differentiations in weird places you wouldn't expect. All these things are actually opportunities. We can get into them, right? But let's talk about what's already on the books, right? Because past is prologue, right? We want to look at what's happening already as kind of our analytical framework for what's going to happen in the future. So when I look at what's out there already, right, I'm just very excited, as you were saying. I'm almost shocked. I'm very excited as well. But I mean, both on the government side as well as the financial side, there's just a ton of regulation in existence and coming down the pipe, right? So if you look at, right, the TCFD, the Task Force for Climate-Related Disclosures, right, the U.S. Senate has released its Decarbonize the Economy to Address Systemic Risk report. In May of 2021, Joe Biden issued an executive order. It literally sets the stage for sweeping climate-related disclosures. And the minute that kind of came out, right, or I should say actually, like that was in May. Basically a month and a half before that, the SEC came out with some public comment proposals on how companies should have to disclose on the financial side what their carbon spend is. Look, my point here is that regulation is forthcoming. I mean, you just have to look at Europe, right? We could see where national and supranational governments are already headed. I mean, it's, and I would say the biggest one that people don't talk about that often is the IFRS, right? That's the International Accounting Board standard. If you look at what they've done, they've implemented the International Sustainable Standards Board. That's basically a framework for all European companies. We're talking about 50,000 reporting companies to report their climate risk, including their carbon spend. This is going to promote, in our estimation, as a part of our investment thesis, that these types of regulatory initiatives will promote higher purchasing, more volume in the voluntary carbon markets. And again, we at Kidbrooke Environment Fund want to try to get ahead of that.
Jeremy, I'd love to quickly just ask for you to briefly explain Article 6 and why it's so important from COP28. Do you mind taking that over real quick?
Yeah, so Article 6 really came about COP25. So the COPs, the COPs are UN kind of conferences, right? They're conferences. We just had one in Sharm el-Sheikh, Egypt. That was COP26. Article 6 addresses the voluntary carbon market. It's basically the framework for which governments would then align their own national policies into a supranational policy, right? So the issue here is sometimes when you think of like a securities regulation, for example, you have a bunch of disparate rules and regulations, but honestly, if you really want to have liquidity, most governments kind of harmonize themselves, at least to some degree, with the most liquid market, which is the the US, the SEC rules, right? So because the US has not been involved in a material way yet, although I just did mention, we are definitely become more interested under this administration with the voluntary carbon, the regulations around voluntary carbon markets. What happened is the UN, as part of its protocols, is trying to build, right, a direct financing and change mitigation regulation into its own rules-based carbon emissions trading, and then filter that down into supranational and national governments, right? I mean, look, to be honest with you, Nick, COP27, which just happened, was a bit of a disappointment. After COP26, which was in Glasgow, there was a lot of buzz. There was a lot of excitement about Article 6 and creating a voluntary carbon market standards, set of standards, but it didn't happen at COP27. COP27 was mostly about mitigation payments from developed world to developing world. That being said, I have a high level of confidence, Nick, that either COP28 or soon thereafter, we are going to see the next iteration of Article 6, Article 6.4 specifically, that is going to basically, I don't want to say mandate, right? The UN is, it's kind of donor institutions, but it's certainly the Europeans are going to tend towards that. And I think that will force the SEC's hand. It'll probably also include kind of the IFRS as well as GAAP. And I think that will be kind of the kernel, that will be the spark that takes the voluntary carbon market into a much more liquid market.
And I think just to touch on Article 6.4, to break that down for people in the audience who aren't aware, Article 6.4 essentially is trying to reach the eventual goal of establishing an international compliance market based on those standards set out by COP26 and the United Nations backing over the next 2 to 5 years. So I do agree with you, Jeremy, about COP27 being a bit of a disappointment, but I agree with you completely that over the next few years and the next few COP meetings, we should see this massive move in working towards more globalized carbon markets rather than segregated markets as they are today.
Yeah, I agree. It's a good way to kind of summarize that.
I guess, one question I have for you guys is, we're talking about all of the positives and what could come down, but what would be some of the main risks that could come down for the thesis of Kidbrooke in terms of its investment, but also in terms of the broader scale global
well,
VCC?
Craig, let me spend just 2 minutes on what the actual thesis is. Okay, so we've talked about
Perfect.
how our investment strategy. Our investment strategy again is to buy high quality voluntary carbon credits and to provide project finance capital to developers of high quality voluntary carbon projects, right, in a risk managed way. Okay, so our fund thesis is basically starts very broad. If you want to get anywhere near to the Paris Accords 2.0 C limit, even even 2.53, we have to absolutely include voluntary carbon credits, right? Okay, next, right? Because these voluntary carbon credits are necessary, right? Regulations, as we just discussed, are going to keep coming, right? Okay, what's next? Okay, because voluntary carbon credits are intrinsically necessary, and because of more regulation, demand is on the rise. So let me give you an example. This is my latest data, Bloomberg's latest data. So it's through October 2021. Through October 2021, 127 million offsets, voluntary offsets, each representing a ton of CO2, were purchased. That's up from 93 million tons in 2020. So it's a growing market. Yes, is the market going to be volatile? Sure. Things like the invasion of Ukraine do not help. But my point is that demand is growing. Absolutely. So thus, based on those qualities, we want to own high quality carbon credits, right? Remember, there's no central registry yet, where we talked about that, right? So what is a good carbon credit? What is a good voluntary carbon credit? It's a carbon credit that a large purchaser theoretically would want to purchase, right? So I'll give you an example. Microsoft purchased recently 1.3 million tons from 26 projects. Many of these credits were brand new. Mostly they were bought from a cattle farm in Australia. I think it was close to 400,000 tons from Australia. That's a high quality carbon credit project, voluntary carbon credit project. That's the type of carbon credit project that we would be interested in investing in. And again, what is high quality, right? High quality means that it has certain aspects, right? It has what we typically refer to as MRV, which is measurement, reporting, and verification. And the big thing, Craig, is we are more interested in additionality versus avoidance. I know there's a lot of lingo on this call here, but let me just take you through this, okay? Additionality means you got a piece of land, you plant trees on it, switchgrass, bamboo, whatever, et voila, you have a higher carbon sequestration. Okay? Avoidance is absolutely the opposite end of that. Avoidance is you have some mediocre land already, you contractually agree not to do anything to it for X amount of years, right? That's not really creating additional sequestration. It's just saying we won't hurt that land. So we prefer the first, right? We prefer credits that have afforestation or reforestation, so credits that are additive in their nature. And so those 5 things are roughly the investment thesis of Kidbrooke. That's where we're going and how we're going to get there. We believe that over the intermediate time period, so that's 5 to 6 years, these voluntary carbon credits are going to increase in price. We do not forecast the price of any security or carbon credit whatsoever, but it's our thesis that over that intermediate time period, it's a very good idea to own these voluntary carbon credits.
If I could add just a bit of information that I think is valuable about the voluntary market. Jeremy's been discussing in detail about these high quality credits existing within the market. And a lot of the reasoning I think that it's important to mention high quality is that there is a vast difference between various different carbon credits. They could be using various different verification standards. They could be using various different agencies that are able to attest to those standards that they're trying to comply with. There are objectively, because there are different levels and mechanisms of verification, higher and lower quality credits. And Jeremy's absolutely right in saying by having those high quality credits that prove additionality in comparison to avoidance, you're going to end up seeing a lot of optionality as these markets evolve for those credits. Could they be potentially absorbed into a compliance system as compliance markets grow? The potential is higher should your credit in the voluntary market have a higher standard. Though that could take time for those things to happen, having the higher quality credit is objectively better for an investor's ability to see optionality in their investment over time holding the credit.
Yeah, that's a great comment, great comment, Nick. Let me just talk very quickly about
Well,
risks, right?
just I got to put you a little bit on a pause here because we're getting to that time where the next session's coming in. You want to look at the Q&A section there, respond to that question first, and then I have a question before we transition.
Okay, would you like me to ask the question, Kareem? So the question is, say I'm a farmer with 1,000 acres of high yield crop that is naturally gobbling up tons of carbon each day. Can I monetize the carbon processing work done by my plants? Where would I fit in the carbon credit? Where would I fit in the carbon credit trading world?
Yeah, the answer is absolutely. Give us a call. There are companies that specifically work with agricultural entities, both family agricultural entities and institutional agricultural entities, particularly in the Midwest. Iowa is really good about this. So if you own 1,000 acres, or whatever, there are ways that you can effectively monetize that, and there are ways also that you can monetize it without any kind of capital outlay. I'm not going to give any opinion as to what program is better than the other. We certainly are interested in developing that program ourselves over time, because we believe that kind of U.S. farmland is super high quality kind of sequestration. It's great dirt basically. So we're happy to speak more about that. But yeah, there are programs where you can absolutely monetize that.
So, so congratulations, Craig and Nick, for moving out of the crypto. Obviously, the timing was right. You made a shitload of money, and now are looking at something new, and have found this venue for part of your fund. How difficult is it for investors outside of getting involved with Kidbrooke to make these sort of investments independently? Or do you have to go through a fund? Or is there, I mean, Jeremy mentioned, I think, that there was no marketplace that you could go in and buy up these credits. So just help us understand that.
Do you guys mind if I take this?
Yeah, go for it, please.
What I would say is the biggest barrier to entry for retail investors entering into the carbon markets is the learning curve for carbon markets. As it is a nascent market, maybe not nascent as though it's new, it's very much rapidly evolving and changing. Going through the protocols to make sure you're making the best decisions possible and that any trading you're doing is of the highest quality is very, very important, yet difficult to figure out at first. The main answer I want to give to your question, Karim, for retail investors, the vast majority of carbon credit market deals at this point are done over the counter. It is not as large and liquid of a market as we foresee it becoming in the future, but that also gives investors an opportunity to get in early before it does become easier for all investors to potentially access the market. I do believe that going through funds is a very good way for investors to get an allocation, as it is a group of people that are investing, such as Kidbrooke in this case, that have the experience and understand the market and are ready to make those decisions. But should an investor want to educate themselves and get involved in the carbon markets, yes, it is possible.
Yeah, the other thing I would say, Nick, is just to follow on that very quickly. The sizing of positions of voluntary carbon certificates, credits, et cetera, they're significant, right? So you have to have kind of institutional sized capital in order to basically create a portfolio. There are some retail types of products. Again, I will not comment good or bad, but we get paid as a fund to do the origination, to do the due diligence, to risk manage the portfolio over time, which includes hedging in the futures market, and so that's the type of exposure that you could expect from Kidbrooke.
I can add to that too, is that there are different equities that you'd be able to trade on the open stock market that do trade carbon credits and things like that. The only issue that you might come into is the level of how good is the carbon credit. And that's the one thing we're trying to push here, is that in time and very soon, it's all going to be about how good is the carbon credit, how green is the carbon credit, is it being are you getting that carbon credit for doing something good for the environment and taking out carbon rather than not doing anything and saying you have a credit. And I think there's going to be a big differentiation coming, and you can already see that starting to bubble up.
Okay, thank you. So I brought in Scott and Jimmy, Val Hill Capital. They've been very integrated into a lot of the technologies, blockchain and natural resources. Jimmy and Scott, we do want to make a proper introduction of who you are and what you do, but I thought we'd give you the opportunity to meet Nick and Jeremy and Craig here before they disappear. And if you have a burning question or comments to what you've heard just now, talk about it.
Well, good to see everybody. I think we've met the team. Remember the conference, if we had another meeting. Impressive guys. The private equity side, the venture capital side of the firm is very consistent with kind of what we've done as well. I think we're playing two different parts of the market, but it's been impressive to hear them talk.
Well, I was hoping for some contention here and some pushback, but obviously not. I mean, you guys obviously met before I could make an introduction. So kudos to you guys. Craig, Jeremy, Nick, thank you so much for being here. It's always a pleasure. Hopefully we'll see you in Colombia, October 18th to 23rd. If you want to hang around to listen to this next session that Jimmy and Scott are going to get involved in, it's pretty cool.
Thank you
Good to
so
see
much.
you guys.
Thank you. Great seeing you guys. Thank you so much, Karim. Thank you, Linton.
Just to add an addendum, if there's anyone who wants to have any follow-up conversations to talk about Kidbrooke, feel free to reach out. Jeremy, if you want to add anything there, we're always open to conversations.
Yeah, I'm happy to speak to anyone, including just more conversation with respect to the market itself. It doesn't have to be conversation that is on point to investor due diligence. I mean, we would be remiss to say one last thing, which is our partners. We have three other partners, two other partners, excuse me, on the Kidbrooke side, so the investment manager, and we do give 10% of our investment manager profit back to buying carbon credits. We actually want to make a lot of money in this fund, but we actually want to do something good for the world at the same time. So we try to kind of dual hat, lead by good, as well as our pecuniary interests. So I really appreciate everyone's time today. I hope you enjoyed listening to this, and I'm happy to follow up with anyone. Thank you very much.
Thank you. We'll share your information as we get requests in, but if you want to throw that in the chat's open. They'll catch up with you.